Have you ever wanted to know the top 3 financial mistakes that you must avoid in order to have financial freedom and success in your life, and do that while walking around Mexico when we are at an 87-degree day? We've got about 76% humidity and 87 barometric pressure. Well, that's what we are going to do today. Number 1 is actually having no priority with your investments, right? Everyone treats investments like they're the last thing that you should do. You know, after your expenses, after you spend money on Netflix and groceries and all the things that you need and want, then if they have anything left over, then they invest. It needs to actually be the opposite. So your investment should be your number 1 priority. You should treat them actually like your number 1 expense. And the reason why you can and should do that is because if you don't, you're just flat out not going to do it. But number 2 is, if you have expenses, okay, you can always negotiate those. If you're coming, like I'm talking about being as serious as investing, where the point, like, let's say you have no money, it's going all to expenses, right? You're just living paycheck to paycheck, which is what over 76% of Americans do. Okay, let's say that's you. Well, I'm talking about being as serious as actually saying, hey, I can't pay my rent this month, calling the credit card company saying, hey, I can't pay my credit card bill, and negotiating a lower interest rate and a payment plan before you say, oh no, screw my investments this month, I'm just going to put it all in my expenses. That's how serious I'm talking about. Everything is open for negotiations. Your investments need to be your number 1 priority over everything. I don't care if you're in a lot of debt. I don't care if you're living paycheck to paycheck, like I just said. It needs to be your number 1 priority, because if it's not, you're just going to keep skipping over it over and over again, to the point where you get to be 76 and you've never had experiences like this, where you can travel and do whatever you want to do, hang out with the people you want to hang out, run companies you want to run, wearing clothes you want to wear, literally having complete freedom, options, and choices. You will never have that if you are consistently not investing money, because what investing money is just sacrificing the pleasures of today for a better future tomorrow. So start thinking about it like that. Like, you are setting yourself up for massive success by making that decision, by making it a priority. Number 2 is you actually need to automate it. A lot of people don't have any consistency. So they'll start on Robinhood or an app and they never get any type of consistency. And the reason why that's so important is because it takes the emotion out of it and it allows you to build compound interest, which is the 8th wonder of the world. It's one of the most powerful things you can possibly comprehend. And unfortunately, humans have a really, really difficult time comprehending compound interest, which I give tons of examples in my other videos. But the reason why it's so important to automate it, which you can do on pretty much any app, you just literally, like on Schwab. So my long-term investments are on Schwab. So go to schwab.com, it's just Charles Schwab. You type in AIP in the top right-hand corner, it's automatic investment plan. You can have it automatically draw from your bank account every month right into the account and then automatically invest into investments. I do that on the crypto side as well. This is called dollar cost averaging or time diversification. It takes the emotion out of investing and it allows you to consistently do it over time and not worry about being emotional when there's a lot of volatility in the market, right? Most people make terrible decisions because they're making investment decisions on emotion, right? When it goes down, they think it's going to keep dropping, so they don't add more money in. And then when it goes up, they think it's the top of the world and it's never going to come down. They just keep buying and buying. And that leads to a higher purchase price, a higher average purchase price. If you would have just dollar cost average, you have a much lower purchase price, which means you have a higher profit margin. So I'm serious, go set that up. It just like allows you to have consistency. It is super easy to do. You can do it on nearly any platform. Doesn't matter if you're talking about crypto or stocks or you're investing into REITs, right? Real estate investment trusts. We even have people do that in our funds. We have over 140 investors and they, about half of them actually dollar cost average into our funds. So that is incredibly important, to take the emotion out of it by automating it. And again, it is incredibly important to do. And here's the thing. A lot of people ask, okay, how much do I actually invest? Right? I have no idea like where to start. You should always, or not always, but the majority of people should start with 10% of your income. Then you're probably asking, okay, what do I invest in? How much do I invest? First of all, can't tell you what to invest in, right? I'm not a financial advisor or tax advisor or any of those things. I'll do another video about how you can somewhat determine on what to invest in based on where you're at now and where you want to be in the future and how much risk you're willing to take. But it's best to start with 10% of your income. So start investing 10% of your income into long-term investments. Okay, so you can automate that every month, right? If you make 10 grand a month, just $1,000 a month that gets pulled from your bank account, goes right into your investment account. Another thing I highly recommend doing, which most people actually completely avoid their majority of their lives, because the truth is they don't, maybe number one, they don't even comprehend this aspect of it. But number two, they don't value themselves enough to actually invest in themselves. Okay, the highest return will always be investing back into yourself. And you could go ask Warren Buffett, and he has confirmed that on multiple occasions, the most successful investor of all time, arguably. And I think that's super important to do at the beginning of your investment career, is to put the money back into yourself first. So books, courses, mentors, masterminds, self-education that actually allows you to level up in life, right? So 10% of your money goes into yourself, right? Number one, then into long-term investments. When I'm talking to entrepreneurs, which we coach dozens on a weekly basis, the order of importance is always in yourself, then the business, and then into long-term investments, because you're going to get the highest ROI on yourself. Then the next highest ROI is going to be likely your business, if you're a successful business owner. The third and final mistake I see a lot of people making is too much complexity, right? So they're trying to overcomplicate their investment strategy. And I see this across the board, just in people's personal lives, their businesses, and especially investments. That's where people are really going wrong, right? The majority of things are quite simple. They're not all easy, but they're quite simple. And a lot of people overcomplicate them. And that's where they get eaten alive in fees, and they stress out about things because they don't understand them, and then make emotional decisions because of that. In my personal life, right, if I have clothes I don't wear for 6 months, they're gone, right? In my business life, right, if there's too many employees here, overhead is too high here, or we've made an application process for leads too complex, we see percentages drop, right? So I'm always looking at things on how can I not get run over in Mexico, And then investments, right? In retirement accounts, there's usually about 17 fees in like the average general retirement account. And most people are paying up to 3%, which is 3% a year of assets under management, which is quite high for people to literally invest into a freaking mutual fund that gets you 8% a year, right? Right there, not even accounting for inflation, you're at 5%. So really look, I'm not going to go on that street because it's about to be really, really loud for you guys, but look at your investments right now and ask yourself, how much do you understand them and how complex are they, right? A lot of people think that their investment strategy for the rest of their lives need to be trading. People don't understand the difference between trading and investing. Trading is pulling money from the market. That's a skill you develop, just like riding a bike or surfing or crossing the road and not getting run over again. How quick do you think we can do this one? We are going to risk reward. You know what I'm saying? That is something I always ask myself. Is the reward great enough for the risk? If it is, you make the decision. You commit to the decision. So anyways, people think that they need to start trading to be successful with their investment strategy. That is not the case. You do not need to become some crazy trader that pulls money from the market. I think it's like in the high 90 percentile, like upwards of 96%. If you just dollar cost average the market, which I just talked about in number 2, about automating everything, if you were to just do that over time, you will outperform about 96% of the active money managers, okay? So it can really, really be that simple, but people try to complicate it. They think they need to trade and sell this and buy that and use leverage and options and futures and all that stuff. Majority of the time, if you just keep it simple, keep it consistent, and do it and prioritize it, you are going to be in a great, great place. Okay. Let me know about what you think about my top 3 mistakes to avoid. Also, let me know, where do you think I am? I don't know where I am. I'm asking for your help, right? I'm just trying to get home. See what I'm saying? So let me know in the comment section where you think I am and what you would add as number 4. Thanks so much for watching this video. I'll see you here on this next one.